Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Ramon Looby, the president and CEO of the Maryland Bankers Association. Ramon's got a great perch looking at over multiple banks in the Maryland region. And so we got to talk through a couple of things he's hearing from the membership, including their challenges in attracting, retaining, developing talent, and how the pandemic has changed the things they face on that front. Some of the regulatory push against what he called junk fees. Well, not what he calls, but I think what are being described as junk fees, and kind of the important financial services actually being offered behind those, and the challenges of meeting those consumer needs, and kind of how he balanced that with this desire to protect consumers from a fee point of view. And finally, a little bit of talk of the economic conditions, what's happening overall, what we might expect in the future. So it's a really fascinating conversation. And I always enjoy getting to talk to people who represent multiple financial institutions and can kind of give us an overview of what they're seeing from multiple different institutions. And Ramon's a great example of that. So without further ado, please enjoy this conversation with Ramon. Ramon, thanks for joining the podcast and making the time today. I really appreciate your being here.
Thanks, Jeff, so much. Really appreciate the opportunity to share some thoughts with you.
Yeah, I'm looking forward to this. So I ask all my guests this question up front. Most people I've talked to in the banking industry describe themselves as accidental bankers who did not grow up dreaming of being a banker one day. So I'm always curious the paths that led people to where they're at in the industry. So we'd love to understand, kind of the path that got you to where you're at today.
Well, we were talking just a little bit off camera, just about my background, and I would tell you, 1993, I was a part of a team of elementary school students that won the Florida stock market game. So I tend to think that ever since that time, I've been running away from banking until all the way up until 2016, when I joined Bank of America as a senior vice president and policy lead, working with the great folks there. But yeah, I actually just had a chance to speak to about 200 kids here in Maryland who had recently won the game, and I, shared with them what I think it meant to me, and that it's important to have aspirations in the field of financial services. It's not just a bank teller, it's not just a loan officer. There's so many things that you can do to have, I think, a remarkable impact on your community.
I love the stock market game. Have you followed your winning portfolio through the years? Is it still doing well?
Listen, sometimes, I guess I'm old enough now that I can faintly remember. But I think what happened was we went all in on a healthcare stock, and I think it was a 10-week period, and I think the stock had recently IPO'd. This was back in the days now where there were not decimals, but actually fractions. So we had to figure out fractions, to pay, to buy the stock, because I think it was like a 115 3/8, something like that.
Fraction, no decimal fraction. Okay. Oh, that's funny. Yeah. Healthcare stocks, usually there's some good stocks in there. You should have bought some Apple, though. If you bought the Apple and held on, that would have been a good call. Woulda, coulda, shoulda.
Absolutely.
Can you tell me, you're, at the MBA, but what is, I think of the MBA as a credential that comes after the name of people who went to business school. Tell me a little bit about the organization, what you guys are and what you do.
Absolutely. So there's the Maryland Bankers Association. There are a few MBAs out there, Mortgage Bankers Association, and then every other state that starts with an M, Massachusetts, Maine, Mississippi, Missouri, et cetera. But here at the Maryland Bankers Association, where we just celebrated our 126th anniversary, we're about being a resource for banks. We have, we're a place where banks come together to talk about issues that are concerns in the industry. So we advocate on behalf of our members, and they can be single community bank branches all the way up to national or multinational banks. So, we talk about the issues to ensure that there's a fair playing field out there, to make sure it's a robust marketplace. We also invest heavily in the training and development of our bankers. And so we partner with the member institutions to offer a number of services and products that help our bankers have a broader look at what's happening out in the marketplace, whether it be changing regulations, whether it be emerging trends, we try to help our bankers stay on top of it. And then also, thirdly, we represent our bankers before legislative bodies, regulators, and others to talk about issues that really benefit the industry as a whole.
And what are the major issues you're hearing from? I love guests who have a perspective across multiple institutions. I feel like it's a really interesting perspective and purview to have. What are the number one, the top couple things that are on the minds of your member banks and institutions right now? Because it feels like a really interesting time, both from an economic point of view, from a regulatory point of view, from a legislative point of view. What are you hearing from them?
Well, there are a lot of things happening right now. So if you think about some of the macro impacts post pandemic, you think about what's impacting the business community as a whole, and that's talent. Ensuring that you have the people on hand to ensure that you can get the work done. And we think banking is a very important job. It's a very special job. And so, we weren't immune to what happened, post pandemic. So we're really looking. I think when I talk to some of my CEOs, talent is a big perspective, a big priority in what they look at. Otherwise, I would tell you there's a lot of attention on issues such as I don't know if you've heard this term out there, junk fees. This idea that some of the fees or for the services that our banks provide are somehow junk, and I think there's a significant pushback against that idea, particularly given the trend in the industry where this is significantly less. If you look back 5 years, 10 years, 15 years as a percentage of revenue for banking as a whole, and so I think you would be hard pressed to see that consumers find if I'm buying groceries or formula here on Thursday, but I don't get my paycheck doesn't hit till Saturday. Is that a fee in which I'm willing to pay for a service? Then yeah, but I think it's a little misguided to label all fees that you may not necessarily think are helpful junk.
Interesting. So let's dive into those two topics a little bit. I mean, I'd love to see what are you hearing from your members that's effective in this kind of retention, acquisition of talent. I mean, that's certainly a topic here in Silicon Valley where we operate, like question number 1, 2, and 3, because it's such a cutthroat industry. But I'm really curious what's effective for them, what you're hearing that's working well, because it's a tough challenge for every business, I think, and particularly as I feel like financial services is undergoing a bit of a transition in terms of the level of work we want out of our employees, the kind of engagement we want with our customers, and finding the people who are able and willing and excited to do that is not easy.
No, it's not easy, and I think you add to that. You talked a little bit about what we're seeing. I think the CPI reading today, 8.6%, highest in since 81. There are folks who've been in the industry that long who have not seen that. So add to that
Yeah.
um, the pressure, the downward pressure on filling positions, and then sort of what you're seeing is playing out for the first time. I would tell you, I think bank leaders are really focusing on the teammates experience, whether it be the onboarding, whether it be trying to find ways to promote or retain, or really find ways to expose that talent to other areas in the bank for growth. I would tell you, you take a look at what some of our banks are doing, really setting the tone in terms of how do you support your bankers. I think a lot of this was done during the pandemic. I mean, you can hear stories of banks paying, just flat out fees. Whatever you need to be in, we'll pay for your childcare. We'll make sure if you used to take public transportation, we'll pay for you to have an Uber or a Lyft. And not to offend any of the other Silicon Valley transportation firms, but all of those things really demonstrated how important our banks and I think our members know that their employees are.
Yeah, yeah, that's great. And let's talk a little about the fees because I feel like this is a tough area. And I'm curious what you're advocating for at a policy level, or where you see the most concern. But because I feel like there's this line, the fine distinction between really making credit or money available when it's needed, and the way we do that, and whether the fees are appropriate or not. And it's certainly versus payday lending. I think most bank fees are quite reasonable, and that's often the alternative. So, what are you seeing, and are you seeing any innovation in that space? It feels to me like a place where, you know, short-term credit at lower prices would be a good thing if we could make it happen without breaking the bank. I mean, figuratively and literally. Um, but it's a hard problem to solve.
Yeah, I think I think the market is working to sort of deal with this. I think you've seen a number of larger institutions and not so large institutions do away with several fees, and they're working with their customers directly and offering them products. I think to your point, credit at a cheaper price, which will help consumers in times of unknown emergency. I think you might know the statistic out there. Was it 80 or 90% of Americans don't have enough cash on hand to cover $1,000 emergency, and that's a real concern, and something that can cause anxiety. And so to know that you have a partner in your bank that says, "Hey, if you're having this issue, here's something that we can offer." But to the other end, I think again, I haven't been around since '81, so some of these things I don't know. But in talking to some of my bankers, they go back to the time when basically, if you say you were to label every fee a bank charges a junk fee, and you get rid of, let's say overdraft. Well, the education that I got was simply this: if you think about, if you were, and not a lot of people do this now, but if you're, writing a check at the grocery store, previous to sort of overdraft regulation and that coming into effect, these stores or institutions could put your check up and say you're going to pay X amount of dollars on top of what you owe us. Otherwise, you can't shop here anymore. And I think that would be probably one of the unintended consequences of sort of this blanket idea. So, Rob Nichols, who I know, who I think President and CEO of the American Bankers Association, recently penned an op-ed in the American Banker that said, more dialogue is necessary between the industry and CFPB, particularly on this point, and to really understand, what's the goal for the campaign.
Yeah, it's. I feel like the law of unintended consequences is a story of so much public policy that's well intentioned, and yet ultimately, do you achieve what's out there? And sometimes the thing we forget is what's the alternative of the thing we may not like, and maybe the thing we like even less. And finding that balance is not easy, and particularly in a space like this where you talk about really trying to meet the needs of underserved consumers who have a real need to access money and credit on some terms.
Absolutely.
I wanted to ask you a slightly different thing now, which is, so much has changed during the pandemic. We had the closure of branches. You're talking about changes in the way people recruited and retained talent, the way consumers interacted with us, right, digitally so often, even people who weren't really digital bankers. What do you see in the shift of things that is happening that is more permanent versus more temporary? I mean, I think there's this real question of like, is this the new normal or was this a blip? And I think there's probably things that fall into both sides of that line, right? There's things that were a blip and are going to go away, and things are more permanent. What are the things that you see that are more permanent in terms of changes the way we interact with consumers, operate as banks? Like, what are you hearing that's like the real structural permanent changes from that experience?
Yeah, I'd start with just a premise, and then I'd sort of work my way through some data, right, to give you a sense of where I think this is. So I think just the premise is this: banks, no matter what is going on in the marketplace, what's happening, are going to find ways to serve their customers. They're going to find ways to serve their clients in their communities. You see that especially during the pandemic, right? I was talking to a group just the other day, and I talked about long before we knew what masks were needed, before we knew what vaccines were, there were bankers working at their kitchen tables at 2 o'clock in the morning trying to get PPP loans done, in a time where no one was coming into the banks. And so that sort of demonstrates sort of the forward thinking that banks have had to build these systems and platforms so that no one was in 6 months, a year to an office, but we made sure that money got on the rails and out to the people, to the companies and small businesses and families who needed it. So that's the premise I'll start with. But I'll take a look at, say, the ABA's most recent study on bank usage by Americans and consumers before the pandemic. Back in 2019, I think it was something like 1 in 6 went in the last 2 weeks to inside a financial center to conduct financial services. Well, as we've seen in the pandemic, a lot of trends were pulled forward. And so we saw immediately, some would say we are still in this pandemic. Um, you think about what has happened. So pulling that forward, they found that now 1 in 10. So almost a 50% decrease in those who were going in before. So I think you'll find that banks are seeing that and they're reacting to it, but it doesn't mean that they're, as I started at the beginning, banks will always find a way to serve their customers no matter what's happening in the marketplace.
Yeah. There's another topic that I know is close to your heart and that you recently put an op-ed about, which is around financial literacy and education. Talk to me about, not just what was in that piece, but how you think about that, because it feels like such a critical component of what we need as a society to move forward. How people interact with financial services. So, what do you see that's working there? What's your perspective on what we can do to do a better job of educating the American consumer and the public about financial topics?
Well, I'll tell you this. I think there was recent news just today or just yesterday that Michigan became either the 17th or 19th state to require that high school students receive financial education as a part of their graduation requirement. And so I think you're seeing momentum there. And so the op-ed, which ran in the Washington Post about 2 weeks ago to the day, or actually 2 months ago to the day, really talks about this. And my co-author, Julie Weaver, who is the executive director of the Maryland Council on Economic Education, which really funds and organizes a lot of initiatives, particularly the stock market game. That's why it's a full circle moment for me, um, to talk about the importance of it, right? Because we make the point in our op-ed that everyone talks about financial literacy as if it's, just a thing and that's out there, but it has real consequence. It has bad credit as a real consequence. And, you think about an area like Maryland where you have a lot of opportunities in government jobs. Some of them require security clearances. If you don't have good credit or credit that's in the affirmative, that's a knock. And that can mean an opportunity for a job that costs you hundreds of thousands of dollars over time, plus the fact that you're now going to pay higher interest to borrow money, regardless of anything you do. So, you know, we think that is a core principle, that getting more financial education into the hands of consumers helps them make better informed decisions about what their financial goals are. Just talking recently to some regulators, and I said, look, sitting here in this room, I can ask us to define money, and it's going to mean something different to each one of us. And so, if you can just imagine what it means to different consumers and different points in their lives, there's no one way to sort of get it out there. But when you think about what public education, public schools offer, I think it's a way to help us ensure that the consumers that are coming to the marketplace are prepared and have the information they need to make good decisions.
Yeah, and it's the other thing I think about is when you don't have this done through the school system or in some general way, then financial literacy and in some ways good credit that can come from understanding the system end up becoming inherited. It's the parents who are savvy enough to educate their kids or get a credit card for them when they're young to start building a credit history. And in that way, we start actually creating a legacy where the good credit is inherited from generation to generation because of this, the way education is handled at the family level as opposed to being done more systemically, which is really not a particularly good thing for us to do as a society. I'm curious, do we, I don't know the history, do we used to do this? Why do you think this is something we have to advocate for? I mean, it just feels to me like, versus many things, I'm going to say something a little controversial here, but that we learn in high school now. Like I took calculus, and Man, I've been an engineer for many years and I haven't touched calculus, but understanding finance certainly has been much more impactful to my life, my ability to make smart decisions. Why is it controversial or a difficult topic that we say this is something we ought to be teaching every student who goes out into the world how to really understand the financial products they'll be encountering and take advantage of the system?
So first of all, you plucked on a heartstring of mine. I was forced into taking calculus in my senior year. I thought I was going to get just a pass, to do teacher aid or something. But my guidance counselor said, "Yeah, you need to take calculus." Well, I haven't touched it either. So I think, to your point, I don't know the rhyme or reason why, this is something that is now becoming a trend. I think the point we made, and Julie Weaver and I made in the op-ed, is that, you know what, dissecting a frog may prove to be very helpful for biologists or future veterinarians. But, when you put financial education in there as well, it's going to be a positive for every consumer, every student who's preparing for adulthood and to come into the marketplace.
Yeah, calculus. We don't have to go on calculus, but my other bugaboo is statistics. I feel like we should, so much of what we're seeing in the world today is probability. And what this old saying that I love said, "A man is a deterministic creature living in a probabilistic world." And I feel like I would have much better had a good grounding in statistics, probability, in the theory of that and finance than calculus. No offense to my calculus teacher in high school, who was great, but that those are skills that I feel like every consumer needs and ought to have. And I don't know why we don't do a better job as a society giving that to everybody, because it is not only education for the consumer, but it's a fairness topic, right? It's really a question of like, how do we make sure everybody is able to participate fully in that system and understand it, and not be disadvantaged by lack of understanding.
Let me just say this. It's not a question of if parents are like falling down on the job. How many things do parents have in front of them, right? It's, I think part of what we looked at was that parents don't have the time. If you're, talk about single parent or parents that are working two jobs and multiple kids, where do you find the time for yourself in some of that? So it's really about a societal good, a benefit, right? We invest in so many things as taxpayers, whether it be the interstate highway system, whether it be, the local park. I think you'll be hard pressed to find, a better investment in more deliberate, good outcomes uh, from students who now have this information and education.
Absolutely. Well, Ramon, before I ask you my traditional closing three questions, I want to ask: is there anything you wanted to talk about or felt like we should have covered that we didn't hit on today?
Listen, I again, Jeff, I'm pinching myself because I didn't think this was actually happening, but it is, and I really just appreciate the opportunity to spend some time with you. I think, as we talked about, talent is going to be really important going forward, and I think banks have been leaders in really building out opportunities for their teams to grow and develop in this environment.
And that's only going to become more important in I think, in the work of the future. How you both attract and retain and develop your talent is going to become critical. All right. Well, Ramon, here are the three questions I ask everybody at the end. I think you know what they are, but I'm going to throw them at you anyway. Number one, what's the best piece of career advice you've ever gotten or given?
Best piece of career advice was let your light shine. I got that from a fellow executive. Won't out him or her, but that was advice that I got when I was really just at a pivotal moment and taking a look and really just trying to figure out what's next. And it was, be authentic to you, and figure out those things that you just want to continue to shine and develop. And it was the best advice that I got. It took me some time to really accept it, that it wasn't all linear, that your path is never just linear. It's for you. You are the only one in which you're sort of racing against. So in that sense, it really is great advice.
Reminds me of the Steve Jobs graduation speech at Stanford. I don't know if you ever listened to that, but his point was can only live a career forwards, but you can only understand it and connect the dots looking back. It is not a linear path, and the path may not make sense at the time, but if you follow what's true to you when you look back. You'll see how the dots connected to get you where you were. It was always one of my favorite concepts.
Absolutely.
Let your light shine. Number one. Number two, what's the best piece of advice you've gotten about the consumer banking or consumer lending space generally?
Change is constant. And, learn as much as you can about the business, right? Don't limit yourself. And it's not to say that you're not going to be a master of none, but as you continue to grow in the space, I think it's important to have a deep understanding of all the many things that make up the work of a bank. And that's, in our work at the MBA, I'm excited to be a part of that deliberate process to help broaden perspectives for rising bankers.
I love that because I've always felt like too many employees I know understand their job but don't understand the context of how it fits into the business, how the business makes money, right? How your job contributes to margins or profit or revenue or cost or whatever, wherever you fit, but understanding the financials, how it actually flows through the business, how your business works, what the roles are, and where you fit in that. It's such a critical thing if you really want to have opportunities for advancement to see that bigger picture. That's a great piece of advice. I give that basic advice to a lot of people. Understand the big picture. All right. Last but not least, one bold prediction for the future. What do you got for me?
Well, one bold prediction for the future. I'm no economist. I don't play one on TV or on Twitter. But I will say, I think, taking a look at, listening to the economists that I know and, especially our chief economist at the NBA, there will be some drag after seeing, the highest CPI number in 40 years and demand being cut here, there, and everywhere. I think my big bold prediction for the future is that we will get back to 2019 numbers, but it'll be a little while before we get there.
All right. I'm not sure that's the note I wanted to end the podcast on, Ramon, but the reality is what it is. The prediction is what it is. And I appreciate your taking the time to come here and share your thoughts and perspectives with us. So thanks for doing that.
Jeff, thank you so much for having me.